Everyone always asks this, commercial or residential real estate, which one's more profitable for you? Now, that is the wrong question to ask. You'll be asking yourself, well, the risks of both strategies, how much money can you make from both strategies, which is more scalable, how often do you make money doing either strategies, commercial or residential real estate? I'm going to cover 8 main points today on this video to help you understand what is the best option for you as an investor to go towards, commercial or residential. My team's done $1.6 billion transactions over the past few years, and it's about a 50-50 split, probably $1 billion in commercial, around $600 million in residential. It's not about 50-50, but we've seen a lot of transactions, and we do way more commercial real estate, especially now, because of the main 8 points. So you will make sure you stay to the end, because the last one is going to blow your mind. Number one, I always think that you want to understand the basis for both strategies. And let's cover residential real estate, how you make money. There are a few main ways. Obviously, number one is buy and hold. Now, the goal for most investors is not cash flow. It's either taxes or appreciation. That is the main strategy to make wealth in real estate. Because you look at the math, you make about $100 per door a month in profit. For all expenses, you gotta pay for insurance and maintenance and all these different things involved into your property. It's about $100 per door you make. So you own 10 properties, great. You're now making, $1,000 a month from those investments. $10K a year, which is nice, but it's not going to change your life. And 10 properties, you think about the math behind that. An average price home is $500,000. I'm in Austin, Texas. We do deals though in all 50 states. So you need help though in all different areas in commercial or residential real estate, but mostly commercial. Down below, link in the description. If I don't see you at least 5 to 6 figures in your next investment, I work for free. And so far, all my clients have saved the minimum of multi-5 figures with our help in commercial real estate. But the down payment for that, why I brought up the $500,000, you're investing $100,000 at 20% down. That means 10 properties is $1 million. So I'm going to invest $1 million to make 10K a year back. Now this is cash flow, which is why I'm saying cash flow by itself, not the greatest investment because, it probably won't change your life. Now, on the other side, though, if I'm looking at it on an aspect, let's call it $1,000 a month, not even $10,000, $1,000 a month is what you're making if it's not paid off. Now, on the same point of that, the taxes, depreciation, those are the big point in making the most amount of money. Now, that's strategy one. Now, strategy two of residential real estate is you have wholesaling, you have flipping. Those two strategies are also great as well because, it is an active income strategy. You have to be a lot of work to do so, but you can make, 5, 6, sometimes 7 figures if it's a luxury real estate transaction. And those are the 3 main ones. And of course, you can add in flipping on a further level. You have the Burr method. You can buy, rehab, repeat, and so forth. Also, you can also do a live-in flip where you're living in the property and you upgrade every couple of years as you advance in your career, get back to houses, which is a more slower strategy. That's just more about leverage strategy, kind of the Burr method on steroids. So those are the main ways to do so in residential real estate, 6, 7 figures, more than possible. Now, the next point, number 2 in all this, is how is commercial real estate different? How do you actually make money, make profits on that strategy? Funny enough, it's really similar to residential real estate, just different assets and bigger properties. So number one is you have the buy and hold. Now, the difference with commercial real estate, buy and hold can actually be a lot of money. You can buy deals, let's say for $1 million, and you cash flow to $3K a month. Let that really sink in. After all said and done, $2-3K a month for $1 million down, which is not a huge, grand slam deal for yourself. So let's say my math here, if I do a $1 million property, my NOI net operating income is $100,000, my cap rate is of course 10%. And let's say my expenses for an entire year is $70K. So if I make $2-3K a month, that is the spread of that net free cash flow, which is pretty standard. The returns there are massive compared to residential real estate. But on top of that, you also have appreciation, you have cash flow, and of course you have your taxes. So the all in all on that one, much bigger. Also in commercial real estate, you can do wholesaling and flipping. You can buy a property, you can say, hey, I have this property, I got it for $5 million, but I want to sell it to you for 5.5. Or you fail with that. Okay, the numbers make sense, sounds good. You just made, $500,000 for this wholesaling transaction to somebody else, which is one strategy. Another strategy, of course, is flipping it. Now, flipping in commercial real estate can be a number of different ways. One way could be, I bought this property that was in disarray, had terrible operations or terrible, maintenance going on in the property, and I increased it. So two ways to do it. You have either OpEx or you have CapEx. CapEx is going to be the structural things, repairs, upgrading units, expanding. That is a flip that is more like a house flip. So you're actually adding value to it in terms of different features and upgrades and so forth and automations. And option two is the OpEx one, which is actually easier. Let's say you buy a property, and we did a couple weeks ago. This property, the OpEx is terrible. They're charging all different kinds of rents. One guy will be paid $50 a month. Next door is $150 for the same size storage unit. So increasing the NOI for that one is easy. Hey, let's just stabilize the rents, get all of them to market value, or at least the same value of each other, and then boom, you just added 5-10K NOI to your bottom line for a few phone calls, a few automations, and a few, party evictions as well. But overall, pretty easy. And now you can resell that property for more value because the property makes more money. In real estate, commercially, it's all about what does it make. Comps are great, like residential real estate. Comps over here are super important in terms of what the houses are selling for. In commercial, it's what is the bottom line? What is it making? What is it losing? And so forth. So again, on that point 3 on this now, kind of combine them together, cash flow, and both of them have a massive difference. Obviously, residential real estate, smaller properties. Now, if you do Airbnb, short-term rentals, luxury rentals, you can get up to, that 2, 3, 4K a month income. I'm not saying it's not possible. I'm just saying on the commercial side, it's easier to do. You have triple net as well. Triple net is going to be, they pay for taxes and insurance and CAM, all these different things for you, plus rent, which gives you a trifecta of what you're looking after. So getting a higher cash flow month by month is actually easier in commercial versus residential real estate. Now, point 4 on all this, right? Yeah, point 4 on all this, precise 5 on all this, is risk, vacancies, and tenant realities. Now, with residential real estate, your risk is actually pretty high. Think about it. You have one property, and that one property, if somebody doesn't move in, takes 6 months, takes 18 months to get it filled in, it is 100% bust. You just lost all your money on that property. And after someone moves out in residential real estate, more often than not, what normally happens is people will not take care of it like it's their own. The carpet's messed up, the walls are scratched, there's holes everywhere. Nothing's really the way you left it when you got leased out 12 months prior. That is a big risk. And of course, people can squat, and the list goes on. I've seen lots of headaches in residential real estate. Now, commercial real estate, however, it is commerce, it is business. If it's triple net, I can guarantee you the people there are probably paying to make it better. I'm not asking you for the money for it, because it's part of the CAM, common area maintenance. And that because it is their business storefront. They want it to be good and well kept, and up to code. They don't want it to be in disarray and falling apart. Now, are there risks? Of course there are. There are businesses that can go out of business. It happens all the time. That is the big risk. So if you're selling to like a boutique coffee shop, it might be a little risky for you. If you're selling to like a Starbucks, you're probably okay, more often than not. Obviously, everything can change. But those are strategies that can really happen to you. And we want to make sure you understand like the magnitude of, the different strategies though. I do think there are going to be risks in either strategy because you think about it, you're investing in a asset. There's no way to not have risk. If that was the case, everyone would be doing it. Everyone would be rich off doing it. And number 5, I don't know this or 2-5, is financing. This does change everything. And normally, it's easier to get financing in residential real estate for a couple of reasons. One, banks know it, they trust it, they love it. It's easy to do. And if you're a first-time home buyer, even better. You have 3.5% down payment instead of 20%. If it's a home you want to do a live-in rent, you can do a live-in flip, You can do a 2 or 3K loan and get a construction loan built into that. There are USDA loans, there's all kinds of loans you can use for residential real estate. That makes it easy to get into. And those are the best ones you can think about. There's also loans like DSCR that applies to both of them. Now, what's nice about commercial real estate lending is that normally it's based on the property. So you get DSCR loan, debt servicing coverage ratio, and this allows us to say, hey, my property makes 50 cents extra per dollar. So it's a 1.5. So let's say my NOI is 100K, my expenses are 25K somehow, and my leverage for my banking is another $25,000 a year for it. I can now, say, hey, I make 1.5 times more per month in cash flow, net free cash flow, than I do on my debt service I'm doing for you guys. There's the gate. This looks good. You're qualified. Here's the money for you. It's easier actually to get loans for commercial real estate because of that reason. And of course, up above, I have a whole video that breaks down all the underwriting and the loan processes in more detail for you. There's a whole whiteboard and other stuff for you too. But this is a quick, easy example of why I think it's easier from that side. Now, there are also loans for you too. You can do as well. On top of that, you have seller financing, you have sub-2s. Both works for different strategies. Now we covered financing. This is probably the most important part, which actually is contingent on financing. And that is scalability. How big can you scale your empire with residential versus commercial? And it's massively different. On residential real estate, the big drawback is you can only have so many properties in your Social Security card number. So if you have 5 to 10 properties, you're probably close to the cap of that, unless you start doing commercial loans or hard money loan, private money, or all cash, or using your equity from other properties to buy all cash on future properties. You gotta be more creative. It's really hard to get a lot of deals in your name on that strategy. Now, with commercial real estate, if it is a commercial loan, they don't really care how many you have. Now, obviously, there are definitely limits to them, but for the most part, you can do way more than you can in residential real estate. Now, this is one aspect of scaling. Another aspect of scaling is management. How are you going to manage 10, 20, 50, 100, 1,000 different houses? It becomes pretty hard. You can't do it yourself. Having a property manager for those different properties makes it hard as well if they're spread across America or spread across your backyard. And of course, with commercial real estate, you can scale pretty quickly. And a lot of times, when you're looking at commercial real estate, the property manager is normally on site. If it's storage units, you have an office for them. If it's a complex, they live there sometimes and they manage the property for you. There are tons of different ways that are built in to help you scale easier and have it all taken care of. Now, on top of that, Another major point too to think about this is that you're looking at scalability and profit on commercial versus residential real estate. Think about the big banks, not big billionaires. The billionaires, these people, more often than not, they're scaling commercially. They're not doing so by 100 homes, 1,000 homes. They may have 1,000 properties, but a portfolio that they built in one single neighborhood and bought a whole package deal. Now, in commercial real estate, you see more people scaling to that magnitude because they have complexes, they have storage units, RV parks, they have hotels. There are tons of strategies involved of really scaling quicker because it's easier, better loans, and so forth. Now, number 7 on our point, which is better for beginners? Which is better for this everyday people? Now, I would say 9 times out of 10, commercial real estate takes the cake. You can get better loans, less competition. People are afraid of commercial real estate and shy away from it. And of course, you can buy properties on the commercial side for the same price you would buy for a house, but with better returns. You can buy a property for $500,000 residential real estate, and you'll probably make a couple $100 a month per profit. But I can buy the same property for $500,000 and have triple net on it and make $500, $1,000, $2,000, $3,000 a month, depending on the asset that I'm buying, with the same exact strategy, with less overhead, less management, and less headaches. Let that one really sink in. So I think for beginners, by all means, commercial is probably the best to do. It's not as hard as you think. And then, which one is more profitable? Number 8, long-term. Long-term, 100%, without a doubt, commercial real estate takes the cake. As long as you do your underwriting, your due diligence, and you do your research, you buy an asset class that you understand, or your broker understands to help you do the transactions. And on top of that, when you're doing so, try to buy one that's recession-proof. Like, I like complexes a lot because people always need homes, and more often than not, apartments are cheaper per month than a house is. So you have much more scalability there. And of course, we said before, with vacancies, if you have 100 units and 5 of them are empty, you're still making money. Whereas if you have 5 houses and 4 of them are empty, you're probably going bankrupt. So crucial to really have those two things in mind, which is why I think long-term profitability, 100% commercial real estate is probably your best option. Now, of course, you can diversify, have some houses, have some commercial real estate, have some triple net. Don't just have all your eggs in one basket if you always need to, but just know long-term, probably the best for you. So kind of wrap this all up together. I think 100% without a doubt, commercial real estate is the winner. If you look at all the facts side by side, I've made other videos as well up above. I see right here all about this for you too, about what it looks like A to Z, how to invest in commercial real estate. And down below a whole playlist for you as well about all things commercial real estate. Now, if this sounds good to you, and like, hey, I love commercial real estate now, I'm sold, Jordan, thank you so much. But you want more help, more support, you don't know how to get started, and the video is too long for you, or you don't want to watch videos, totally get it. Down below, link in the description, how to call me directly. I will walk you through the best strategies, best systems, underwriting, sourcing deals, walking you through the white glove experience, the whole entire process, and aim to save you at least 5-6 figures when you buy and make more money as well while you hold on to the property. And if I don't, again, I work for free. So for none of my clients had that because all saved at least 5 figures or more with our help and support. But as always, thanks for watching. Make sure you smack that like button, tag your friends, give us a share, help me spread the awareness of commercial real estate and this channel. And of course, thanks for being here. Have the best day yet. I'll see you at the top, and glad to have you here.